The first interest rate cut is old news now, so people are asking, when's the next one coming? How many cuts are there going to be? Well, the Reserve Bank looks at a lot more than just the inflation data. It looks at employment data, labour market data, the GDP, and there's been a raft of labour market wages growth data over the last week that you may not like the news about. It may mean that there isn't going to be another interest rate cut for a little while. So this week, Dr. Andrew Wilson and I break that down in today's Property Insider Chat. If you want to keep up to date with what's happening to our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. It's old news that we've had the first interest rate cut this cycle, so the question now is, when will the next interest rate cut and how many will there be? Of course, the Reserve Bank looks at a lot more than just the inflation figures. It keeps a careful eye on our labour markets, and over the last week we've had an interesting batch of results, including strong employment growth, fresh record highs in labour force participation and the employment to population ratio, and an uptick in the unemployment rate. We've also learned that wages growth came in a bit softer than the Reserve Bank's expectations for the last quarter of last year. So what does all this mean for our economy and our housing markets? That's what I want to ask Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, g'day, Michael, and another set of strong figures in the labour market. We shouldn't be surprised. It just reinforces what a extraordinary decision it was by the Reserve Bank to cut rates with a labour market just booming ahead. I don't think we've ever had, well, we haven't had an interest rate cut with such a strong economic performance in terms particularly of the labour market, and a lot of head scratching going on still to find out, how the Reserve Bank can sort of justify this. But nonetheless, it's good news for a lot of mortgage holders, of course. Not so good news for those that rely on deposits, fixed incomes, and one would suggest perhaps that they're more vulnerable to lower interest rates than those that have mortgages, enhanced by lower mortgage rates. But once again, a very strong result for the labour market. We had an uptick in the unemployment rate from 4% over December to 4.1%. Really a meaningless statistic in terms of change, because the 4.1% is exactly the same as where it was a year ago. So much for the justification from the Reserve Bank that things have been tough with high interest rates, because the unemployment rate hasn't moved in 12 months and it's still at levels we enjoyed during the great mining boom of the early noughties. But jobs were up again.
If I could just interrupt for a sec, Andrew, that's in spite of a lot more jobs being created and a lot more people being in the workforce.
Yeah, that's my point, Michael, is that when we look at the job creation numbers, they're again quite extraordinary. We had 44,000 jobs created over January, and that followed a 56,000 rise over December. We've created hundreds of thousands of jobs, Michael, over the last year or so. It's been an unprecedented performance. The reason we had a higher unemployment rate was because the unemployed numbers were actually up by 23,000, which followed a 10,000 rise the previous month. So it was that shift in the number of unemployed that helped the unemployment rate shift upwards by that 0.1%. But again, I want to re-emphasize, this is a very low number, and it's exactly the same as what it was a year ago, and it is around about the numbers we were recording during the great mining boom of the noughties. And it's quite remarkable when we take it into the context of this job creation from the participation rate, because the participation rate has again reached another record high. The previous high was over December, 67.1%. The participation rate over January, 67.3%. Now, the participation rate measures the proportion of the potential workforce that's actually working. So we're now dragging record numbers of workers into the Australian workforce. Those that have retired, perhaps those who are self-employed, are finding jobs because it is such a strong jobs market. And yet we continue to create all these extra jobs, with this remarkably high, record high participation rate. So this is a very strong result. Again, no joy there for the justification that the Australian economy needed some sort of stimulus. I think, and again, the impact of high interest rates, which was supposedly the interest rate cut was a relief from, is not evident at all in the labour market, which has been booming for a couple of years now. So a lot of really questionable rhetoric going on in terms of interest rate cuts. And, we need an interest rate cut. Interest rate cuts are used to stimulate the economy. They're designed for times of economic weakness, just as interest rate rises are designed to quell economic strength. And yet here we have one of the strongest, if not the strongest, labour market in our history, and we've cut rates. So I really think that any future rate cuts will depend on a real shakeout in the economy to be justified. And of course, that's a negative going forward. And, in terms of inflation, a strong economy getting an interest rate cut can only be inflationary. But once again, the Western Australia was the top destination or the top state for unemployment with a low 3.5%. And, the big picture again, emphasising is lower rates will only support a strong labour market. They will encourage investment, which will mean more demand for labour, which will put more competition amongst employers for available workers, and that competition can only be met with higher wages, and higher wages, unless we get productivity gains, can only be offset by higher prices, which of course means higher inflation. So good luck to the Reserve Bank. They've taken a position, though we'll see how it all works out going forward. But another very strong month for the labour market, and again, tracking where we were a year ago. No sign of the impact of what were promoted as high interest rates on the labour market, and we're still tracking at the levels we were during our strongest economic or other strong economic periods. So Victoria is the outlier in terms of the unemployment rate, up at 4.7%. But the other states are all at around about 4%, as I mentioned before. Western Australia has the lowest unemployment rate, and not surprisingly, Western Australia has the strongest annual jobs growth, 4.2% growth. Victoria and New South Wales both 3.3% growth in jobs. Queensland the second strongest at 3.9%. So unusual.
Well, we know the Reserve Bank was trying to raise the unemployment rate a bit to quell wages growth. What happened with wages, though? Have they been creeping up at the same rates?
Well, no, we've had some quite interesting data coming through the wages. I mean, given how strong this labour market is, and we certainly saw that up until the September quarter last year, you would have expected, and we have seen very strong growth in wages. But the wage index actually eased again, which was released recently by the ABS. The December quarter wages index was up by 0.7% over the quarter, which was a little bit less than the 0.8% reported over the September quarter. And therefore, annual wages are up 3.2%, following the 3.3% rise in September. We've had a very sharp fall, despite the continuing strong labour market, Michael, and high participation rate. We've had a very sharp fall in wages growth over the last 6 months, which is really questionable. The ABS explained that their previous data, which did see that collapse in wages growth from over 4% to just over 3%, being put down to the national wage case, which affected the wage index because it was quite a low national wage case. There was some question whether that was a part of a process to control inflation or not. But again, perhaps it's that impact of the national wage case last year that it's still impacting the wages index. But it's a little counterintuitive, Michael, to see such strong demand for labour, jobs growing at a high rate and a record participation rate, and to be seeing lower wages growth.
Yes.
I'm not sure that reflects what's happening out there in the marketplace, as I think that employers are still struggling to find workers and having to pay more to secure workers in the workforce.
Would it be the fact that a lot of the jobs are in the government sector or government related?
Well, they've still got to compete, Michael, with the private sector. So you're not going to get workers paying, working for less than they can in another environment just
No.
because of the government sector. As I said, there's some real question marks around this data as it reflects the, as it reflects the nature of the labour market. They're really at opposite. You would have expected continuing strong labour market activity to be pushing wages upwards, and
Yes.
but that's not occurring. So we'll see how this pans out, and maybe there is some adjustments to be made in relation to the impact of the national wage case last year. But we've got a lot of questions in the macro economy at the moment, Michael. It's
Don't
not
we?
sort of panning out as we would expect, and dare I say it is an election year, so we can expect the unexpected.
Well, last week we had a chat and announced the Reserve Bank's fall in interest rates. Michelle Bullock has been in the media a lot, and there's been mixed messages about what's ahead. She's telling us, don't expect further interest rate drops. The market's expectation of 2 or 3 further ones this year may not occur. What does these wages data, how does that fit in?
Oh, that's good news for Michelle Bullock because it shows that there's not inflationary pressures pushing up wages. In other words, higher prices being generated by strong competition amongst the employers for available workers in a strong labour market. But I'm not surprised that Michelle Bullock's trying to pass off any sense that there's going to be further interest rate cuts, because I think she knows in the back of her mind perhaps that the macroeconomic indicators and the international indicators are very much against her interest rate cut last week, which and I think she's trying to dampen down any sense that there'll be more, and also trying to offset any criticism if inflation starts rising again and the economy remains strong. We're seeing inflation now re-emerging in the US. The US Fed have quite clearly said that interest rate cuts are certainly off the agenda at the moment, and of course we've got that tariff spectre,
Yes.
which can only place prices higher. So I think it was a heroic but predictable decision by the Reserve Bank, and I think the governor of the Reserve Bank is pedaling as fast as she can to try to dampen down expectations. But of course, as I said, our interest rates are already low compared to other similar economies, particularly compared to the US.
Andrew, in her media statements, Michelle Bullock suggested that her predecessor, the governor of the Reserve Bank, should have started raising interest rates in 2023 earlier than they did.
Well, yes, that was, and that was self-evident because we saw inflation picking up again, courtesy of rising oil prices specifically. But Australia was an underperformer in terms of its interest rate increases through that period, and and they sort of had to catch up at the end of 2023 by having an interest rate increase to try to quell that rising inflation. But it just adds to a lot of questions about the performance of the Reserve Bank. And I don't think those questions have been eased with the decision last week. But it is what it is. And there are a lot of happy mortgage holders out there. Those in the housing market will be happy because it will certainly stimulate house price growth, home price growth. And of course, the government will be still probably opening those champagne bottles in an election year with an interest rate cut that sort of moved against what the macro indicators, not just locally but overseas, were showing. So as I said, the big picture, as you initially said, I'm not surprised that Michelle Bullock is busily and hurriedly trying to quell expectations of further interest rate cuts, because I still think the odds are not small that we might even get an interest rate increase down the line, particularly given how low our interest rates are compared to our competitors. But that will all depend on maybe the largesse of the government in an election period. Lots of giveaways, perhaps. and the price of oil going forward. So it's going to be a very interesting year, Michael.
It will, especially with the election coming up now. We've already mentioned a couple of times that sentiment is changing because of the drop in interest rate. So the average consumer doesn't think about all these economic factors. All they hear is interest rates are on the way down. So one way we keep track of what's happening is with the auction results. There were more listings than normal or than earlier in the year. That's normal at this time of the year as the auction markets start to get back into shape again. How did they perform on the weekend?
Well, just before we speak about the auction market, Michael, just a couple of points. I think you're absolutely 100% on the money when you say how important sentiment is in terms of interest rate cycles, because sentiment is affected by changes to the cycle. It's an opportunity when we get the first change, either to increase sentiment or reduce sentiment, depending on what the agenda is. That's been sort of wasted, I guess, to some degree, because another interest rate cut won't have the same impact on sentiment as this one has had last week, which, sort of wastes that capacity to stimulate the economy. And just some other data that sort of reinforces how we've been going in terms of our labour market, Michael. We had the average weekly earnings released for November by the ABS last week, and no surprise, and I think this reflects what's happening in housing markets, that Western Australia still clearly has the highest average weekly earnings, over $2,000 a week. Average weekly earnings, adult weekly earnings in New South Wales. 2 points there. It certainly reflects how strong, which we've seen with the labour market activity, the Western Australian economy is, and also that there's plenty of upside to Perth house prices, because Perth has that affordability advantage with the highest wages and yet the lowest house prices or home prices of all the major capitals. So there's plenty of upside potential there in terms of affordability for that Perth housing market. And I think that's what's important, to look at those numbers in terms of average weekly earnings.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased.
Getting back to the latest data and how it allows us to provide insights into what's happening with housing market activity in a real-time environment. Last week's auction results, of course, they did include the interest rate cut. Wouldn't have made much difference to sellers, because they would have already had their properties engaged and ready to sell. But it might have just improved the sentiment of buyers, thinking, well, perhaps we need to get in now before there's potentially an increase in buyer activity, those looking to secure property before prices rise as affordability improves with lower interest rates. And we really didn't see any definitive blip upwards from our auction market results last week. We certainly had a surge in listings, Michael, and maybe we could say that the surge in listings, which we expect this time of the year as the year progresses from February into March, that surge was nonetheless more or less absorbed with the same, around about the same clearance rates that we've had over the first few weekends or first few weeks of February. So, more buyers for sure, even though clearance rates were lower, but we need to take that in the context of a surge in listings. So if we can look at the breakdowns, 1,200 auctions in Sydney, Michael. That's a very big
lot.
And still a clearance rate over 75%. I think that's a very positive. Sydney's been quite strong this year so far, Michael, in terms of its auction market. particularly again, it's inner city destinations, the inner east, the eastern suburbs, the northern beaches, the inner North Shore and the inner west have all performed very strongly in terms of regional results in Sydney this year so far. Numbers well up on the week before in Sydney. Clearance rate slightly lower, but still a very good clearance rate there for sellers, and tracking higher, Michael, than the same period last year, which is interesting. Sydney more
That is.
and a higher clearance rate. So I think maybe we did get a bit of a blip or a bump up with buyer numbers as a result of increased confidence from, and maybe increased affordability, of course, from lower interest rates. Melbourne, same story, big leap in nearly double the auctions in Melbourne over the week, 1355 auctions in Melbourne, massive increase from the 831 that were held the previous week. And a clearance rate just a slightly lower. Melbourne's also had a good start to the year, tracking well ahead of where it finished last year. 69.1% clearance rate, lower than the 71.7% recorded the week before, and very similar results to the same period last year, with just a slightly lower listings, but a higher clearance rate, Michael. So again, some good results there, clearly for Sydney and Melbourne to start the year, and maybe enhanced to some degree with increased confidence and improved affordability through lower interest rates. Slightly fewer auctions in Brisbane over the week, Michael, and clearance rate a little bit lower, but we know that Brisbane is a market within its own in terms of its auction results, and certainly tracking in terms of the clearance rate lower than where it was a year ago. But Brisbane was in the middle of a remarkable boom a year ago, where we saw auction clearance rates at some stage move over 80%. Adelaide, big weekend in auctions in Adelaide, clearance rate a little higher, but again tracking below the strong boom time conditions of a year ago. And Canberra continues to point perhaps to a revival. We've been saying that for a while, but 109 auctions in Canberra last week, well up on the week before, and the clearance rate again encouraging over 60%, and certainly well ahead of where it was last year in Canberra. If you're looking for those auction results on a weekly basis, you can get the hot off the press Capital City Snapshot 6 o'clock of a Saturday. That gives you the auction results all the way up to Saturday for the week, and then Michael produces reports on the My Housing Market National Report on Sundays, published at Sundays, which gives you the regional breakdowns for Melbourne and Sydney and the top 10 sales for each of the capital cities over the week under the hammer. And those results can also be viewed at my LinkedIn channel at Doc Andrew Wilson at LinkedIn. And as I said, this is important statistic in terms of understanding what's happening in our housing market on a more real-time basis than the other models that come out. And of course, we've been doing this for years, Michael, looking at auction clearance rates, and they've been a very good and reliable indicator for housing market activity generally.
They are a forward indicator before the results of the prices come out, aren't they? So I can see that Melbourne and Sydney are likely now to get more confidence. Melbourne's market really languished, well, I was going to say last year, but for a couple of years, and Sydney started to slow down. So even if it doesn't cause a rise in prices, I can see it's actually going to put a floor under the Melbourne and Sydney market, and probably will start to bring out some of the more affluent buyers who've been sitting on the sidelines, Andrew.
Yeah, that's right, Mike. On the latest results have shown this in Melbourne, the same old suspects, particularly the Outer East, which has been very strong this year. But the Outer East is usually Melbourne's strongest market segment consistently. But it again was the leader of the pack last weekend, as it was last week, the week before. And they're those aspirational mid-level buyers that are still out there hunting property. And I think that the interesting thing in terms of the Outer East, and we say the Outer East, but it's probably really the Middle East, isn't it? If I could use that.
Oh, that's actually probably not a very good term, the Middle East, Andrew, but I know what you mean.
Yeah, it's not really the Outer East. It's more the Middle East, because we have the Inner East, which is, but it all starts.
I'm talking about the other Middle East, Andrew, but that's, I know you know that, yes.
Yeah, so we'll have to think
the middle ring suburbs.
Yeah, we'll have to think of another term, but it is all the property that lies to the lies to the east of Warrigal Road, basically
Yep.
all the way out
Yep.
past the Dandenongs, and that's a big splurge, and that's a very popular area in Melbourne. But the point
Very.
of that is there's a lot of aspirational buyers that are actually moving inwards now, and I think the slowness of the inner east markets, the inner south markets, are starting to maybe become a bit more affordable or achievable for those buyers, who are
Yep.
wanting to trade up into perhaps what we might call more prestigious suburbs. So that's another potential kick along for that Melbourne market, which has had a good, steady, solid. Let's not oversell it, but I'd say almost a robust start to the year. But we've got a long way to go. Of course, we have the public holiday coming up in Melbourne for Labor Day, so the weekly results will be bigger this week, and we'll just prior to that holiday break, we always get that sort of front end loading. So it'll be interesting to see if the Melbourne market will continue on. But history tells us that there's in terms of auction market results, it takes a couple of weeks for that lower interest rate energy
Yes.
to find its way into the market. But gee whiz, Michael, it'd be a surprise given how strong everything else is, particularly the labour market, if an interest rate cut didn't give our big housing markets a kick along. I'd be really surprised at that.
Well, an interesting year ahead, especially with the election, as we keep saying. So look forward to catching up with you and discussing it all again next week.
Thank you, Michael.